U.S. Treasury Secretary Scott Bessent downplayed any risk of debt default, saying Washington is never going to default as the deadline for increasing the federal debt ceiling inches closer, viewers, and amid concerns also that President Donald Trump's one big beautiful tax bill could further aggravate the country's fiscal situation. Trump's tax bill seeks to, in fact, make his 2017 tax cuts permanent and also seeks to increase the debt ceiling by $4 trillion. The U.S. Senate returns to Capitol Hill on Monday and will, in fact, take up the ambitious spending package. Federal Reserve Governor Christopher Walter said on Monday that interest rate cuts remain possible later this year, even with the Trump administration's tariffs likely to push up prices temporarily. Now, speaking in South Korea, Walter said that given the rise in inflation pressures tied to President Donald Trump's import tax increases is unlikely, in fact, to be persistent. I support looking through any tariff effects on near-term inflation when setting the policy rate. Economists and Fed officials generally believe the tariffs will push up unemployment and inflation also while slowing growth. Over in the East, China has accused the US of seriously violating a trade pact between the two countries and has also vowed, in fact, to take measures to defend its interests, diminishing any possible direct talks with the US and the US in near future. In fact, in a statement, the Chinese Commerce Ministry accused Washington of introducing a series of discriminatory and restrictive measures, hitting back at President Donald Trump's claims that China had totally violated the agreement. Now, during talks in Geneva last month, the two countries reached a deal that would temporarily allow their reduce their tit-for-tat tariffs, which had soared as high as 145%. However, since the talks have stalled and tensions between the two economies have been soaring.